Hi, Andrew Bell here, and it's great to be with you to be able to share the information I derived whilst in Parliament House in Canberra for the launch of the 2021-22 federal budget. My e-newsletter goes out to the best part of 250,000 people from all over Australia and from many parts of the world. And for many, these reports provide vital insights into the Gold Coast real estate market, as people are always forming views as to what they should be doing with their real estate holdings. It was really great to be able to get the information directly from the appropriate federal ministers about the implications of the federal budget, particularly into the real estate market. Now, the budget sets the environment for a healthy economy. That is, of course, vital to the real estate market as it feeds through to consumer confidence. And so what many have described as a big spending federal budget certainly has laid the foundation, the platform for good economic growth over the year or two ahead. It's great to see the economy bouncing back stronger than expected from COVID-19, and the fundamental platform has been set to increase employment and to keep interest rates at as low as possible. Aren't we fortunate with our federal budget in comparison to so much of the rest of the world that's gone into double-dip recession? For most people involved in real estate, they've been keen to know what direct measures were made to support a healthy real estate market. It will be important because what has kept our real estate market strong over the past 6 months were many of the short-term measures such as JobKeeper and JobSeeker that are no longer with us. Helped us with a soft landing rather than a hard landing. And of course, as most noted, the latest budget has had a heavy focus on housing and home ownership. A key announcement was the Home Builder Scheme, which is estimated to produce $30 billion in construction. It's designed to help more Australians into home ownership and providing an extension to the first home buyers loan and savings schemes. It also provided changes to the downsizer incentive that's targeting the provision to free up larger homes for younger families with older families moving into apartments. There are grants of up to $25,000 for new builds or renovations, and there's an expansion of the First Home Super Saver scheme from $30,000 to $50,000. The government's also announced a $10 billion underwrite guarantee for the reinsurance bill, which is likely to see insurance premiums for over about 500,000 policy holders reduce. Now, from July 1, there are 10,000 government guarantees that have been made available over 4 years to eligible single parents with dependents to build a new home or to purchase an existing home with a deposit as little as 2%. There are a further 10,000 places for first home buyers to build or buy a new home with a deposit of just 5%. In addition to 10,000 places already scheduled to roll out for existing homes. First home buyers will also be able to release up to $50,000 in voluntary contributions to their super funds to pull together a deposit faster under the extended First Home Super Saver scheme previously capped at $30,000. There's also provision for couples who sacrifice $12,500 from their $80,000 annual income that could help them save more than $86,000 over 4 years, which is at least $20,000 more than they could save in a standard savings account. This is the largest range of programs I've ever seen in a federal budget for housing, and it's designed to target young families, single people, and those on lower incomes who would otherwise find it difficult, if not impossible, to get into the housing market. It's spread over several years to keep a sense of momentum, although it could bring forward some of the buyer demand that may see a softening a couple of years down the track. However, I guess that's something that had to be done to keep some momentum in our economy at present as we get out of the grasp of this pandemic-affected economy of 2020. The outlook is for elevated levels of detached housing construction to provide the supply that is needed, even though it is noted that demand will start to soften, particularly because of the slower population growth and a preference for outer suburb spaces, and an awareness that detached housing preference may limit demand for apartments and curtail unit construction in the coming years. When looking at all of the above measures, it would be safe to say the government has set up an environment to maintain near record low interest rates for the foreseeable future, and there's a higher accommodation monetary policy setting to support borrowing. All good for the real estate market. Whilst there, of course, are critics who believe that there was an overfocus on the housing market at the time when it already was performing well, this is about making sure that those struggling to get into housing markets do get the opportunity to buy their own homes. A positive for the real estate market, although those in prosperous areas may consider that it did not directly support their component of the market. However, it does, because unless you have the base performing well, it doesn't flow through to the entire marketplace. It was more than interesting to be in Parliament House on this amazing budget night, to get the opportunity to be hands-on in this information sharing and release, to get the opportunity of actually speaking to some of the key policymakers. I look forward to being with you in a couple of weeks' time, and I'll get more information about the real estate market as we keep our finger on the pulse and identify that there are already changes occurring and how those changes may affect you. In the meantime, could we be possibly any luckier to be here in Australia? We're regarded as one of the only couple of countries that's a standout in the way we've really dealt with COVID, not only from a health perspective, but of course in our economy. Eternally grateful. See you in a fortnight.